So let's talk about what's actually moving markets today, because there's some pretty interesting stuff happening, starting with the big winners. And honestly, Credo Technology, ticker CRDO, is absolutely flying right now, up 18%. They just smashed their revenue guidance for Q3, coming in at around 404 to 408 million, when everyone was expecting maybe 342 million. That's a huge beat, and we're talking over 200% year-on-year growth. This is all about AI connectivity, and that sector is absolutely on fire right now. Then there's Spotify, ticker SPOT, up about 11%. They crushed earnings with 751 million monthly users and beat on pretty much every metric. The takeaway here, streaming is still growing strong, and Spotify is proving they can turn users into actual profits. Datadog, ticker DDOG, is another winner, up 9%. Revenue hit 953 million, and their cash flows are looking really solid. If you're watching the software space, this is one to keep an eye on because their 2026 outlook is pretty optimistic. Now let's flip to the losers, because this is where it gets interesting. S&P Global, ticker SPGI, got absolutely hammered, down nearly 12%. They missed on earnings, and their 2026 guidance disappointed. That's a massive move for a stock like this, and it's telling you something about how sensitive investors are to any signs of weakness right now. Coca-Cola, ticker KO, down 3.4%, missed on revenue with 11.8 billion versus expectations of about 12 billion. The concern here is US demand looking softer than expected. When a giant like Coke starts showing cracks in demand, that's worth paying attention to. CVS Health, ticker CVS, is another one down about 2.7%. They actually beat earnings, but here's the kicker. They lowered their cash flow guidance for 2026. So even when companies are beating now, if they're cautious about the future, the market's not giving them any credit. The broader picture, markets are higher overall on US optimism, but look, there's real nervousness underneath. France's unemployment just hit a 2-year high at 7.9%. And people are watching those upcoming US retail sales and inflation numbers really closely. The takeaway for investors? Earnings beats matter, but forward guidance matters even more right now. We're seeing massive moves on guidance misses. So keep your eyes on what companies are saying about the rest of the year, not just what they did last quarter. That's your market snapshot. Stay sharp out there.